Berkshire Hathaway slashing its stake in Taiwan Semi in the fourth quarter. So we look at this, Jason Snipe, who has considerable ownership here in the space, and we say, okay, you purchased a $4 billion stake in November. You slashed 86% of it in the fourth quarter. Now, it's always very difficult to read into 13Fs because you don't know the context on anything and what really is current as of this very moment. But I look at something like that and I say, what's the message here? Is it a broader call on chips? Is it a macro call that they think it's going to deteriorate? What are your thoughts as a investor in some of these spaces, in this space?
Yeah, and to your point, Scott, I mean, who knows exactly when that happens, in the quarter. And I think early on the A block, we talked about this. A lot of us were off sides as it relates to kind of cyclicality areas of the market and also growth areas of the market. So our ownership is in Qualcomm and obviously NVIDIA. As it relates to NVIDIA, for us, I mean, that they've got caught up in the AI trade. I mean, the stock's up 55%. It's an expensive stock trading at close to 70 times. But from an innovation perspective and just where they sit, I think they're just further ahead, and they are well positioned to take advantage of what's happening in artificial intelligence. On Qualcomm's end, I think there's been an inventory issue for a lot of the sector, and I mentioned this earlier. But Qualcomm, there's been some softness on the handset business. There was a slight miss on revenue, beat on the EPS, but Qualcomm's up 20% year to date and trades at 12 times. And they're diversifying revenue here. So I still like semis, as it relates to the growth trade and tech in general. I just think that there's still opportunity in that space, and I actually like it more than large cap tech.
Rob, stock's down 6.5%. That's TSM, but does this make you sort of think twice?
We own a lot in the space, and I wouldn't be surprised to see many of these names give up some of their gains for a bit. I think if you own anything within semis, you want to focus on capital-light businesses. And we own the equipment manufacturers there. These heavy CapEx and commoditized parts of that ecosystem are dangerous. And, companies that don't need to spend a lot of money and are much less commoditized are the better places to be. Listen, I think they're attractive names. I mean, you look at what happened Monday with Cadence Design, CDNS. I mean, they did phenomenal, and that's an expensive stock. So to your point on selecting the right companies, it's about execution. It's not just about valuation. In a space like this, that's working. I know you've owned Cadence for a long time too.
Had Cadence since inception. I think back to Warren Buffett for one moment. There's something odd about it. It's very uncharacteristic. That's not his style of investing, to quickly take a position in November and then exit the majority of the position subsequent to that. So everyone could kind of speculate on what it ultimately might be. Maybe it's U.S.-China relations. I'm not sure. But the point is, I don't think it's indicative of the semi industry. I've said quite often, I believe the semi industry was first into this valuation contraction, and it's the first out. And I think you could be selective there in owning particular names.